Hello everyone, good evening. Sorry for the cancellation of last lecture on Friday. I was not well. Good evening guys. Hope everyone's good. I'm audible.
Yes, Rishabh, you're audible.
Guys, let me know, when was your last session? First session which happened? What was the date? Can we recollect? And when was your last session? 29th October. Is it everyone? Saturday, right? Is this a Saturday batch? Okay. That was the first class, right? Okay, fine. So you all from the Saturday batch, right? If I'm not wrong. 29th October was a Saturday. Okay. So guys, you recollect what all we did? Huh? Where is reserve and surplus comes from? One is source and one is application. Okay, Manish. We'll do it next time. Yeah, guys. So you recollect this? The changes. Equity share capital we made schedule for everyone. Equity share capital, other equity, the plant and property was remaining. Inventories and from the cash flows. Did anyone try? I've given you an homework, no? Did you guys try?
Yes.
What's the answer?
For balance sheet total, you are asking?
Yeah, the balance sheet amount.
31,458,000.
31,458,000.
458,000.
Others, you got the same answer? Anything else? Write in the chat box. Anyone over here got some different answer? Same. Asking you. Okay, so I think if everyone has got the same answer, then it should be right. But still, okay, let me do it. Okay, so we started with let me do it from over here. Now it will start giving you some this is my assumptions. Okay, I'm just changing the assumptions over here. Since it's my link, I'm not solving it again. I'm just linking it to see. Okay, what was your equity? Equity was 3 million, right? Your PP purchases were what was the purchase? It was PP purchase 10 million. It was 10 million. Okay. Then your purchase inventory. Five. Fuel was 4. 4, sorry. And then what assumption this? Solely inventories and sales. One second, I think I deleted this. What was my sales? Since I have linked everything, I'm able to do it directly. Tax rate was 40%. Dividend payout I have taken 10. This was the answer, right? No? 31,458. So I think everyone has done it. Those who have got it, now this is how it is. Right, so I'm keeping this for your reference. Those who have not done it, you can do this when I send this file. Okay, but everyone got it. Now let's. I hope everyone is clear with it. So if you this is a first part of modeling where you can, if everything is linking as it is, or everything is linked to your model and a balance sheet is telling, then it is a good job. Now if you can change numbers over here, you can just change numbers over here, your balance sheet will tally and your numbers will change. You see, means that you have, so here you have to only change your assumptions amount. You don't have to change your other numbers which are in black, only the assumptions amount. If I do this 20 lakhs, see what it makes a difference. See, when I do this 20 or let's say 50 lakhs, see what happens. See, the cash becomes negative. Can I do the capex of 50 million? Yeah, if I take an assumption, if a wrong assumption of 50 million, see now it shows that my cash is negative. Now can I do this much of capex? If possible. The modeling helps you know this kind of assumption that when companies gives you vague assumptions that they say that we will do this much of capex, we will expand our business, etc., etc. So modeling help us to understand that whatever they are saying or whatever they are assuming isn't possible, because if they assume this, it is not possible because their cash becomes negative, and if their cash becomes negative, they need to borrow funds. So at least they need to take debt or they need to raise equity. Without doing, they cannot expand their business. So that is why modeling plays a big part in fundraising or analyzing valuation of the company, where a change in a simple assumption changes whole of your valuation. This is how you come to know from modeling. And the assumptions that you may see, even for a business now, let's say you are want to grow. Whenever you make a business plan, go to a bank to get a loan, you have to make a business plan which says that your growth will be this much, your sales will be this much, your profit will be this much, your cost will be this much. Now if you say something in random, in something very randomly, and if it doesn't matches your model, then obviously is the bank going to give you a loan for this capex? If you show him some vague figures, they will, the analyst over here will catch you that this is not how you can earn cash. With this capex you can do a negative cash, and if this is the scenario, I will not give you loans at a very low rate. I might give you at a very high rate because your company seems risky. Okay, so this modeling helps you in banks, analysis, equity research, valuation, fundraising, majorly in finance. This modeling plays a big part. So you should know all this linkages. Okay. Now let's go to our this file. Now we had, see, one schedule was remaining, that was plant, property and equipment. Now let us start making plant, property and equipment. Guys, if I say that I have used this asset of 5 million, in balance sheet, do you put the gross amount, the amount that you have purchased, or the amount after depreciation? Which amount do we put on the balance sheet? We put on the balance sheet amount before depreciation or after depreciation? After depreciation. Now, those who don't know, the depreciation is what? See, now you have used this asset for 1 year. See, this is what I said. I said that you have purchased this asset on the day one, but you have also used this, right? You have used this asset for 1 year. So obviously the value of your asset decreases. The value of your car, does it be the same after 1 year? Decreases, right? The value of your car. Once you start using it, the value of your car decreases. So depreciation is also what? A decrease in value of your asset. And this is only for fixed assets. Okay, your inventories don't depreciate. Okay. So here, now how to take that depreciation? Now there are few methods, as a straight line method and WDV method. The one who don't know, it's okay. But those who know, which method should be used? Straight line or WDV? Which is more precise method? Which method you think that should be used? WDV. So why WDV? Why not fixed asset straight line? Why WDV? Why not straight line? Because value will never be zero. Closing balance not fixed. Okay. Reducing balance not fixed. Depreciation cannot be the same for every year. Yeah. Why depreciation cannot be the same? Straight line is there, no? It's usually same only. Okay, fine. Can say depreciation cannot be same. Okay, now see now what happens practically. Is it my voice is not clear, guys? I got a message saying that my voice is not clear. Ashwarya, the voice is clear. I think there's some problem with your speaker. I think if it was not,
No problem, sir.
I got a message from Ashwarya. Should I just check with your speaker? Okay, some issue with your speaker. See now, what is the problem with the SL with WDV is that, see now, if I give an example, let's say you own a car worth 10 lakhs, okay, 1 million, 10 lakhs. So we'll talk in millions only, okay, not lakhs. You have a car worth 1 million, okay. Now, the value of the car depreciates. Let us I take that it depreciates by 10% every year, okay. You say it should be used as WDV. So 10% over here will be this, right? And then, take it over here, for example, 10% over here. And the value decreases to 900,000. So next year, 900,000 again. Again, you take 10%. And what about 900? The value becomes this. Like this, guys, how many years will it take for your car value to become zero? How many years will it take? If I do this method, now every year you will report this, right? Every year you will report this value of the car on your annual report. How many years will it take for you to depreciate fully? 11. How 11? Now, if you use this method, you said not WDV, written down value. Why 10 years? How? 1 second. Let me. This is what 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Still my value of the car is 348. Even after 10 years, the value of my car is 348. Then, is it actually? How did you come up with 10, guys? Sakshi and Prashant? Rishabh, how you got it 10 years? If I use a W, right now, this is WDV, right? Every year I take this value. You know, the problem over here in WDV is that, see, if I look at your balance sheet after 10 years, you will still show me this asset. And you know, it goes on. If I ask you, this goes on. Yeah, it will never be zero. As with WDV, the value of the asset will never be zero. It will still be something, something, something. But actually, is it? Can you say the value of your car which you purchased 10 years before is 3,48,000? Can you say practically? Can you say this? This will happen ever? No, after. And this car, no, this car is not your personal car. This is the car which you are using for your business. Let us say you are a traveling business. You know what will happen to the car after 10 years? Would it be even in the, would it be even? You can drive that car? Would that be in that condition to drive that? Do you think practically you can think? A car, you are using it for 10 years. Still you say the value is 3,48,000. So it is practically impossible to get this. And even after 10, 11 years, you will still find a value over here. Right? 11 years still you find. You know, ideally, you know, the life of the car is how much? For a business purpose? What is the useful life of the car? How many years you can use the car properly? Business car, not for personal, not a personal car. The car which are used in business, let's say a touring business or which are used by many people. Let's say if you have a traveling business, 7 years, 5 to 7 years max. Ideally 5 to 7 years, 8 to 10 you can stretch, but you know 5 to 7 years it is max. You know, after that years the car will start giving you heavy maintenance costs. No, ideally, so that car becomes worthless. Can you do the same business with that car? You know, the car interiors will be there will be problem with the interiors. There will be problem with the the suspension. There will be problems with the gear. There will be problems with your steering wheel. Can you give such cars to your new customers? So you are a traveling business. You're into a traveling business. If you give a 10 years old car to the customer, will he come back to you again? Right? You have to upgrade. Right? So this is how you analyze business also. The property is the car. Let us say if you have purchased this car, you know, how do you charge depreciation? If I say that you had charged this, you had purchased this car for 1 million, and I say the useful life, you know, ideally, useful life is 5 years. You can see in the video, Apurva, you have the video, you can see how it's the same thing that I have taught. Okay. That is why we are giving you videos. If you have missed anything, you can just look at. Many of them have done the assignment, so I think it was clear. You must have not done your assignment. Useful life. So, you know, if I use this, so what does it mean that I have spent 1 million for 5 years? Means can I say approx I have spent 200,000. So at the end of 5 years, can I say the value will depreciate and be zero? Can I say that? In every year, so what I do is, now this is my depreciation. How I calculate is directly divided by the useful life, because this car, you know, I will be only using for 5 years, and if I spend 1 million to use that car, I will use 200,000 every year. My value should depreciate by 200,000. Now here you can use your straight line or double declining. That doesn't matter. Okay, the useful life over here is matter. Those who don't know double declining, it's fine. Think in this way, that depreciation is 200,000 per year. You know, for 5 years, it will be in the five years, the asset value will be depreciated. Now, the concepts that we have learned in colleges, SLM, straight line, these are used in relation with this useful life. Okay, and WDV is not used. It is called double declining nowadays. You decline the asset very fast. Like computers, the value of the computers get reduced fast compared to a car or compared to any other manufacturing asset. Do you agree? Computers, laptops, your mobile, the value depreciates very fast. That time you can use double declining. But now let's say we assume a normal plant. Yeah, 3 years max, you don't get any amount for your mobiles and laptops. So useful, so that time you can use the double declining part. But you know that your useful life, if this is important, what is the useful life of your asset? Now, if I say the useful life is 5 years, I say that depreciation should be 200,000. Now, useful life of 5 years can also be written as, 1 divided by 5. I can do and take a percentage. So I know that the depreciation charge is 20%. Can I say? Means on a yearly basis, I charge 20% depreciation for my asset. Can I say that? Useful life of 5 means 1 by 5. That is 20%. 200,000 per year. You say 20% or 5 years, but usually practically it is said 5 years. Okay. 20% we will use in our model because it will become very difficult to take 5 years. But one and the same thing. If I give you 5 years, okay, if I give you 7 years, it should be 14%. Okay, and this is every year, means every year the value of the asset will depreciate by 142875. Okay, fine. This is how you calculate the depreciation rate. Straight line, Kalpana. No, we don't. I have showed you na straight WDV you cannot use because after 10 years you will still show that the asset has a value. So if I look at a business, your business, you will show an asset on your balance sheet saying that 3,348,000 of the assets are still there with you. And ideally, are you making sales from that asset? A car which is 10 years old, will that be in a condition even to run? You cannot count it as your asset. Okay? So that is why on financial analysis, you don't take on WDV, you take it on straight line method. Okay. So every year you will charge. The straight line method is calculated by, that is not method that is calculated, that is calculated with the useful life. So I know that it will be used for 5 years. So each year I will charge 200,000 so that the asset will be depreciated after 5 years. Okay. Now in our example, I had taken how much? 5 million of my assets. I had considered 5 million. Okay. Now let us make this plant, property and equipment schedule. Okay. PP schedule. But now over here, I can make one schedule like this. No, it's open like the opening, addition, add means you add capital expenditure, you sell, sold, right? And then is less depreciation, right? This is how it works. Same now. See, opening, closing, opening, addition, subtraction. Only one part which is added in fixed asset is this depreciation part. Rest all, all the concepts are same. Okay. Addition, subtraction, addition, subtraction, addition, subtraction. In all the modules you get this only. Addition, subtraction, addition, subtraction. There was in equity also, it was what? Addition and right? Addition, subtraction. But only in PP you get one more item, that is depreciation. But now shortfall of this is this. See, if I show you something, okay, opening, Okay, how much we added? We took 5 million of asset. Okay. 5 million, I will put it red since it was an assumption. 5 million. I have not sold anything, and I have charged. I told, let us say I assume that I charge a depreciation of. Okay, useful life is 5. Okay, if I say useful life is 10 years. So how much is the depreciation? Useful life is 10 years. How much is the depreciation? How do you do it? We are finding the depth. We are making a schedules for this PP. Apurva, we are making a schedule for PP where we have to find depreciation. So there are two methods of finding depreciation. One is useful life. Sorry, one is a straight line method. So we are using a straight line method. How to calculate depreciation? The depreciation is calculated as per on the useful life. So if I say that the useful life of a asset is 10 years, means what? The depreciation rate will be 1 by 10, that is 10%. So every year you will charge 10% depreciation. But there's again a problem with this also. When I tell me now this will be 10%, okay? 10% of which amount? 5 million, right? So now what happens? Your asset value is opening plus capex less sold less depreciation. Okay, asset value is 4,50,000, and then we write this fair value. Closing will become opening. Now we can take, now there's no capex. Okay, there's no capex, there's no sold. Now you know that this is how it is used. So what depreciation will be next year? What is the depreciation next year? Same. Your depreciation will be same because what are we doing? We are dividing this 5 divided by 10, right? So 5 million we will, or 10% rather. So 5 million we will take the asset for every year. So this is 5 million. But see, what's the problem with this is that what if I add a one more capex over here? Let us say I add a 1 million capex over here. Now what? I add a one, yeah, I added a 1 million here. So what will be my total depreciation for the year? Yeah, what will be, Shiva? What is the depreciation for both assets now? Will it be 5 million? The useful life is 10 for both the assets. Now what will be? It will be 6 lakhs. This year the version will decline by 1 million again, and this 1 million will again be, 6 million you told you calculated, okay? Now what if I tell that it was sold? Say I sold $50 of it, or 500,000 of it. Now we assume at the start of the year, Rishabh. Usually we assume at the start because we don't get that amount. Okay, so we assume at the start of the year. This is the start of the year we purchased, start of the year we sold. Here it becomes very difficult for us to calculate this. So these numbers are easy, so it's okay. Still you can get 6 lakhs. But it becomes very difficult for here to know how to get this capex. Or else what you can do is for every asset you create a different schedule. For every asset, again, for that 1 million additional asset, start from 1 million. Okay, then for other asset you can start from other 1 million. Then you can get a depreciation total on. But now rather than doing this, when you look at actual annual report, you don't get this type of schedules. This is what we were taught in school, but practically this is, you don't get this anywhere. You don't, I'm just putting it over here for your reference, but you don't get this anywhere. What you get, the schedule, now, if I say that the PPE schedules. Now there are two types of schedule, which is one is your gross block, and second comes with your accumulated depreciation. This is how the schedules are made practically. Gross block means what? Gross means at cost. You only take the cost over here. Whatever amount that you have purchased, you just take the cost, and then here you take the depreciation. Whatever cost, whatever depreciation you charge, you take it down. Now, how does it work? Is that it's same? So here in PP schedule, two different schedules are made under this. Okay, under this, two different schedules are made. That is, one is the gross block and one is the accumulated depreciation. The items are same only. Opening balance, addition, add capex, less sold, and then closing. In accumulation also, it's now opening balance, add depreciation for the year, and now here is no sold. Okay, in depreciation there is no sell. You directly put closing balance, and then after this you get an amount that is net balance or your net PPE. That this is reflected in the balance sheet, reflected in transfer to. What is this? Yeah, net block, net PP. The opening, we started our business with 0. Then how much we added? We added 5 million. Okay, we added 5 million. The 5 million was, so since we do it red. Sold, as of now we don't assume any sold amount. Okay, then closing. The total assets as per cost is this. Okay, that is 5 million. So this is the total worth of assets that we have. Okay, on this I know that I charge a depreciation. Now depreciation, I showed that we started with useful life. Okay, useful life. If I say useful life is 10, so my depreciation rate will be 1 divided by 10, that is, and then just do percentage, that is 10%. So opening balance was 0. Okay, depreciation. Now what will be the depreciation? What will be depreciation? What will be depreciation? Now depreciation, I know that it should be 10%. Now 10% of what amount? Should I take this capex amount or this closing amount? Which amount? Which amount should I take? You see, capex I cannot take because next year also I will do. Let us say if I do 1 million of capex next year, will you only charge 1 million depreciation next year? Or should it be the total assets? So this is the total assets that you have. This is what you have purchased for the year. Okay, this is the total assets that you have. So depreciation should always be on the total amount, that is the closing amount, and not on the what is added this year. See what I've done, is 500,000 is depreciation. Now closing of this is what opening plus this. Now this closing is till now how much depreciation you have charged on this asset. And here, so now total assets were 5 million minus total depreciation that you have charged till now. So your value of your asset is 54.5 million. Got this? The net, so this is what is reflected in the annual in your balance sheet. 4.5 million is reflected in your balance sheet. Let's go to the other year. Okay, this was FY20. Let me show you, then I will come again onto it. FY22, FY23. Now when I say gross, so this is two different schedules. Now this is one schedule. Okay. This is one schedule. This is another schedule. Okay, and this is the part that is reflected on the balance. So make sure it is all a part of PP only, but make sure it is shown in two different ways. Okay, just do this. Okay, this is only one part, but this is shown in two. This is divided. Right? One PP is divided into two things. You will find this again when we do on live company. I will show you what is the why have we making this, because typically you get answers. You typically get numbers in this format only. If you have this format, it becomes very easy for you to write numbers. So when this closing will become opening for next year, can I say? Now, as of now, I'm not taking any capex. Okay, just for as of now, I'm not taking any capex. Okay, zero capex, zero, this zero. So can I say my opening plus capex minus sold is 5 million? It's just a matter. Okay. So this 5 million. Now see, now this becomes, this 5 million will become this 5 million. Yeah, Shubham, the opening will not be net PP. There's a reason because if we do net PP, then what happens? See, this is the problem that happens. No? So if I do this net PP over here, what if you have to take a depreciation now again for next year? And if I add a capex, if you take depreciation on this 10%, then it will be a WDV method. You have to take 5 million only. Here the problem arises. Here what depreciation will you take? You guys said 6 million, but how did you do that? If you take 6 million over here, it will be what, 5 million plus 1 million. This where you got from? This you have calculated, okay? Right, 1 million is what? 10% of the capex amount is what? This into 10%, right? See, every time you cannot use this, it will become very difficult for every time to you punch a number. Over here. Now if you do for next year again, what will happen? You cannot say it is 7 million now. 1 more million, 2 million is added over here. Now it will be this 5 million plus 1 million of this, and then the additional one, right? Right, you cannot do this now. See, this you cannot happen, no? This cannot happen. It's not 6.1 million. This will what? 5 million you charge on this. See, ideally it should be 500,000, 100,000, and then 200,000. So 5, 6, 7, 8. Every time you cannot do that, it will become very difficult for you to. And what if you have sold in between? It becomes very difficult for you to calculate this. So what we do is, that is why we have made this schedule over here, that we have made this two different schedules, and this answer is a combination of this schedules. So we take over here, okay, this one. Now this closing will again become opening. Just keep it all simple. Now what will be the depreciation for the year? This year, can I say it will be again 500,000 into, I'll just take 10% over here. Okay. It becomes 500,000 over here. Here the closing balance is this, and your value is this, right? 400,000. Now it came. In 2 years you charge different depreciation. 2 years you charge different depreciation. The total till now you have charged how much? 1 million. You have used the asset for 2 years. You have used the asset for 2 years, and you have charged for 2 years. So each year you are charging 500,000. So 500,000 each year gets you 100,000. But now see, if I just change one amount over here of 1 million, see, automatically it came 6 million. How did it came? Because I have a closing amount of 600,000. I know that our total assets are 600,000. Okay. I charge 10% on my total assets. I know that is 600,000. Till now, I had charged 500,000 last year. And now the closing is 100 and closing balance. The total depreciation charge till now is 1.1 million, and my net PP is 4,04.9. The same is over here. You see, same thing gets over here, but here you have put some complication. You see how complicated is this? Every time you have to do this in this formula. I have shown you, but it is very complicated, and you don't get this figure on the balance sheet. Answer is same, but here we have used some complicated method. Here you can, now what you can do, you can just copy the whole and just paste it how many years you want. The answers will tally. Yeah, it can be possible, but here now what we do, this useful life, now we club it as a useful life is club. Now what happens in a usually in an asset capital expenditure, majorly the plant, the furniture, plant are the important capex. Okay, other capex are not that high. Now, buying a furniture, buying a table in the office, that is not related to the sales. What is related to the plant and machineries? So major item on the balance sheet now you will find that it is only your plant and expenditure. So what we do is over here we take an average asset. We'll tell you that this depreciation rate, how we take it. You can do it with useful life also. No harm in doing that, but it increases the numbers. So better I suggest that club that and use it. Okay. It's one and the same thing. Prashant, you don't get that answer that the asset was purchased in between. If you want to be more precise, you can take this depreciation rate as an average. You can rather use this and take average of both years, okay, and then charge a depreciation rate on. If you want to do this, depending on you, because since we don't know only where the amount is, you can use this way also. Means take the average, opening plus addition, sorry, opening plus maybe last year's average of 2, and then multiply with the depreciation rate. You will get this answer. You can use like this also. You can use straight line also, directly using this. I prefer using this because it hardly changes my valuation. You can take average also. Many of you strike, you might have strike, but others might not strike that. Why have we taken average? So rather I will keep it same. If it strikes you, you can use it. Okay. Yeah, so that is that is all. We are not making accounts over here. Depreciation is depreciation. You might use it for 182 days, or you will use it for further years, right? So at then you will use same amount of depreciation. You are not valuing company for 1 year. You are valuing for 10 years, 100 years after this. So that you take 182 days now or next, after next year, it doesn't matter. Okay. Taxes paid and provision for taxes, it doesn't matter. You know that you have to pay that tax. Today you don't pay, it will not change your valuation. You have to pay it for in the life of your business. So hardly it doesn't matter whether you take average or not. At the end, it will be same only. When you forecast it for 100 years, obviously it will be same. This is how you can do it. You know, here accounting is different from financing. You don't have to find a number over here, guys. Those who are from accounting background, think one thing, that you don't have to find a precise number over here. You have to analyze that number is. What is that number is? Okay. You are not finding any answers. It is not, not your college exams where find an answer for specific number. This is what forecasting and analyzing. Okay. Directly you get this amount, so there's no need of doing anything. Just you can rather this. And this is the format which is given in your annual report. If you have seen annual report for any company, this is how they have reported. We will see this when we go on live company, but here before that we'll use the dummy number. Okay. Okay. Now this number will reflect on the balance sheet, right? And let me reflect this number on the. Okay. I'll just reflect. I just link this 4,50,000 on my balance sheet, and since I link this, I will remove the red figure. Okay. Okay, now in my cash flow statement, it said purchase of PP is 4.5 million. Is it 4.5 million or 5 million? What was the cash outflow? Was it 4.5 million? Because I have linked it from over here. Where should I link this from? Where should I link my cash flow statement? Should be linked. See, as I've said, all this is coming from a schedule. So we should link this from the schedules and not from an actual cash flow was 5 million and not 4.5. So is equal to minus. Okay, is equal to minus. We go down over here, and 5 million was our cash out. So now with this 5 million, which one? CapEx or closing? CapEx, not the closing one. Okay, this is the cash outflow. Next year, you don't say that you have spent out 6 million. It will be 1 million next year. So the 5 million is the cash that has been. See, when I do this, okay, everything is, but my balance sheet is not telling now. Now, what to do? Balance sheet is not telling the difference of 5 million, 500,000. Yeah, depreciation. We have not charged the depreciation yet. Depreciation is an expense. If I put in balance sheet, then what will change on the, if I put it on the P&L statement, what will change on the balance sheet? What all things will change on the balance sheet? Reserves and other equity. And this will reduce. Right now, if I reduce this, so obviously there's a difference, right? 50 million. There's a high 500,000 is greater over here. So when I do this, now this will reduce from this. Means if I put a depreciation over here, it will reduce this. So obviously it will reduce this, and then this will tally, right? When I link over here depreciation, then this will reduce. See over here, see it is high now. It is 701 and it is 201 over here. So obviously 500,000 is high over here. So when I do this, is equal to, what I do is equal to, I go in my schedule again and I link this. Okay, now which one? This 500 or closing? Which depreciation? Depreciation for the year or closing? See, this is a charge for the year, okay? This is the charge that we have done till now. The balance sheet, P&L is made for the year, okay? It is not an accumulated number. So you cannot take closing over here. Closing is what is the depreciation that you have charged till now? See, it is accumulated depreciation, okay? whatever depreciation that you have charged till now. So you don't take this one, you take the depreciation for the year. That is 500,000. This one. When you take over here, oops, it's still not telling. Why? It decreased, but it's still not telling. Why so? It reduced, profit reduced, but it's still not telling. Why? Any thoughts? Any thoughts why it's not telling? Anyone? Shiva says add non-cash expense in the cash flow. Anyone else? Why it is not telling? So is when I did this, when my profit reduced, See, can I say over here, if everything was done in cash, okay? Can I say 500,000 was the cash inflow? Why do we add back? See, can I say 500,000? 500,000, so 5 million was my cash inflow, right? Out of that, I paid 2 million, right? So 3 million was remaining with me. Am I right? I'm just talking about a cash flows, okay? Because we are doing example, okay? Right? Now this I paid, right? I paid to my employees. This I paid to other expenses. So till now, how much cash I have? 3 million I had. Out of that, 100,000 I paid to employees, 100,000 I paid to other expenses. So can I say 270,000 was my cash? Okay, now did I pay depreciation to anyone? Did I pay depreciation to anyone? No, right? Okay. So I have this much of cash with me, 270. Okay. Let me go down. So this is the cash I have, right? Now, okay, I paid how much? 660,000 as my taxes, right? This is the cash outflow. So at the end, what is the cash that I have? Is 2040. In future, we purchase assets. Can I say this is the cash should be there in my bank account? Am I right? 2040. But why this wasn't telling? Because you were right that when I add depreciation over here, my other reserves decreases. Why? Because my profit decreased. But at the same time, when your profit decreased, can I say I have also taken the profit in the cash flow statement? Right? Profit in the cash flow statement. I have also said that my profit was 15 by 1.5 million in my PAT. So did my cash actually decrease? No, right? My cash didn't decrease. So what is happening over here is that, see, this is decreasing by 50,000. Reserves is decreasing by 50,000. Plant property already decreased by 50,000. And one more 50,000 was reduced from bank account. Why? Because my PAT was there, right? That is, this is coming from, PAT is, cash is coming from here also, here only. So PAT was reduced. But actually, did we pay cash to anyone? It was a non-cash. So ideally, in our bank account, it shouldn't be 1.5. It should be what? 1.5 plus the depreciation, right? That we charge this one. Okay, add, you have to add depreciation. Now, why do we add back depreciation? It is not just because it is non-cash, because the PAT was taken in the balance sheet. Okay, that is why we add back depreciation in the cash flows. Because PAT, we assume that PAT was a cash that we earn. But ideally, when we look at a P&L statement, we find that we have not paid cash to anyone over here. Depreciation is just a reduction in the value. That depreciation cash has already been paid in the part of capex. 5 million was already been paid. You are just taking that part of that 5 million. What are you taking? That you don't take 5 million directly as an expense on P&L. You take 500,000 each year, because as per accounting rules, accrual basis, or maybe income recognition, expense recognition, you should only recognize expenses that were related to do this kind of sales. You know that this 5 million of the asset will be used for next 10 years. So you divide the amount into next 10 years. Okay. It is not a okay, it is a non-cash, but why it is a non-cash? Because it has reduced your PAT. Okay. And PAT, you say that it is a part of your cash flow statement. That is why you add back depreciation. And when you do this, your balance sheet does tally. Got it? Why did your balance sheet tally? Because this was one of the important entries. PAT and depreciation always go hand in hand. Now always remember, this will always go hand in hand. Whenever you talk about PAT, depreciation should always there. Whenever you talk about cash flow statement, rather, when you're talking about that, I am making a cash flow statement, and if I say my cash flow statement start with PAT, so obviously PAT will go with depreciation, because you have not paid this to anyone. PAT is assumed to be a cash flow, means the cash that you have. But ideally, this is the cash that you have, that is 2040. You see this number 2040 is the same number that we just found. This is called an indirect method of accounting. Indirect method of cash flow, rather. Indirect method of cash flow. Now, practically only indirect method is used because you don't get this numbers, actual cash numbers, in any annual reports. So this is how you find your cash flows, that what is the cash that company has generated. Okay. You start from PAT, and you start from PAT, and then you go up. And then we have to find cash flow from operations. You will find it in the sessions to come. Okay, got this? First, now here the main part was linkages. Okay, it should link. Everything should link. So if I change a useful life over here, if I do from 10 to 15, if my numbers change, it is some random numbers over here, but still my balance sheet will still tally. See, this was the only major change or major item on the financial modeling to be known. Once you know this, it's very easy to solve the model. This was one of the important entries, that cash should be added back in the cash flow statement. Okay. Any doubts? Any doubts before we move forward? Clear? Why COGS? No, there's no COGS. The COGS is part of this only, huh? PAT. This COGS you are saying. This is actually not a COGS. If I say now, can I say purchase of inventory was minus 300, and inventory sold was 200. So ideally, can I say that you have purchased more 1 million of inventory additional? Can I say that? Inventory is over here. You have purchased 1 million of additional inventory. This thing is not reflected on your P&L account. Is it reflected? This is 1 million of expense. Is it reflected anywhere? You only reflect 2 million over here. But actually, how much you have shelled out? You have shelled out 3 million. You see? Susan, so video recordings are available for the sessions. You should have seen the video recording before entering the class. You will not understand anything over here. Got it, Shiva? Though I have used it over here, I have taken COGS over here, but that is the reason that I have taken a COGS over here. Why? Because there was an additional expense that was not reflected on your P&L statement. It was only 2 million that was reflected. Okay, that 1 million is over here. That difference is over here. Okay, that is why I have taken COGS over here to show you. Now this will go up after a few days, after a few classes. This will not be. You will only get an inventory amount. The change in inventory amount, that will be 1 million. When we go for next year, now, since it was first year, I showed you this. Okay. You know, the cash flows are divided into 3 activities. If you guys know, cash flow from operations, cash flow from investing, and cash flow from financing. Now, what is this? This is nothing but, see, this cash that we have earned. Okay, you know, I have earned 5.88. If I give you only the balance sheet, see, it shows that I have 5.8 million of cash, 5.886 million of cash. Now, good thing, bad thing? Is it good to have this much of cash on the balance sheet or no? Is it good to have this much of cash on the balance sheet or no? I mean, having cash with you is a good thing or a bad thing? Ideally, if I give you a company's balance sheet, the company has cash. The company is safe, right? You can use that cash, but as of now, it's good now for a company's actual, well-being of the company. Yeah, we can invest it, but I'm saying cash in asset, right? So having cash is always good. You can do anything with it, but as of now, it's just giving a balance sheet. This company has cash, so he can do whatever he wants. This is 5.8 million, so it is a good thing, right? Company has 5.8 million of cash. You know what happens when I say that there's 5.8 million of cash? So why bad? Why bad? Why cash is bad? If you have more cash in your bank account, not a good thing. You don't like cash? Transfer, everyone. No, you don't like cash in your bank account. See now this. That means whatever you can do, whatever on that, but having is a good thing, no? You do anything or you don't know. And don't make finance so difficult, okay? If you're not investing, it's a good thing. If you give such kind of answers in interviews, no? They will ask you more 100 questions. Where to invest, why to invest. Okay. So if asked good or bad, good. And said bad. Just think from whatever you have learned. Having assets is a good thing. Okay. But now what happens over here? This cash, this cash is not, out of this 5.8 million, 10 million is a loan. You see this? 10 million is raised from equity. This is not what you have earned. Am I right? Someone has given you a loan, and this is, then you show that this is the cash. Means someone has given you a loan of, let's say, 10 lakhs, and you say that "Raja, there's 10 lakhs in my account. I'm a very rich guy." No? Is it a good thing? Is it? This cash, so can I say this cash should be earned where in a business? Can I say this cash should be come from operations? Whatever we sell from a profit, rather, the cash that we earn should come from profits rather than someone saying that you have given a loan. See, if you take a loan from a bank and show anyone in your bank account you have this much of money, the other guy who is seeing a bank account statement, he will not know where you are getting from this cash. Where do we get this cash from? That is why cash flow statements have been divided into three parts. To know this cash is coming from operations or that you actually earn this cash. That is why the cash flow statement, this cash flow statement is divided into three parts. That is, what is the cash that you have earned from operations, what is the cash that you have invested, and what is the cash and how much loan have you taken. Now, this cash flow from financing is usually said to be taking of loans and paying back. Okay, what do you pay back to the equity holders? Taking of loans and paying back. We pay dividends. So paying dividends, okay, paying. See, financing, as the word suggests, financing is, this is just a word that is used. Since you're postgraduate, you don't talk about taking loans, paying back. You talk about, I have financed money from bank. I have financed money from equity holders. Okay, that is just a way of saying it is what? Taking loans and paying them back and paying whatever charges they charge on that. So equity holders charge dividends. So dividends paid. What does debt holders charge? Interest. Yeah, you have written. So interest, debt holders charge interest. So interest paid. Okay, these are part of financing. And again, you repay back to the debt holders. So repayment of debt. Okay, you repay back. So what do you call the repayment of equity? Repayment of equity, for repayment of equity, it is called buyback. Redemption is not used, but buyback. It's called buyback of shares. Means what? Repayment of equity holder. Now for debt, you say addition for debt. When you take debt, you take additional borrowing. No, borrowing, or you say additional borrowings for debt holders. But for equity holders, you say equity issued. Okay, just different word. That's it. These are the only 6 activities that comes on financing activities. Whatever you have taken loan and whatever you pay back to them. That's it. Nothing else comes into this activity, financing activity. And whatever, if you have taken any debt, and whatever, from whomever you have taken debt and you are paying them back, that is only the activities which I get into. Yeah, one and the same thing, buyback or redemption. Redemption is not said this way, it is said buyback. Nowadays, it is said buyback. Redemption we used to use in accounts. In finance, they say buyback. One and the same thing. Dividends paid, interest paid, repayment of debt, buyback of shares. Okay. If I say that dividends received, which activity is this? Dividend received. Dividends received. Now, when do you receive dividends? you receive dividends when you have invested in a stock, right? When you invest, so dividends are received whenever you invest. So as the word suggests, invest, so it is an investing activity. This, if you receive some amount from the dividend, it is a part of investment. You have done some investment, that is why you have received. Now operations is the activity which you do on day-to-day basis. Cash flow that is earned from operations is the activity that you have earned, that you have done on day-to-day basis. Day-to-day basis, okay? Cash flow from operation is on day-to-day basis. Investing is money that you have received from investment. Okay, what about interest received? What about interest received? Investment interest received when you have invested in FD, that time you get investment. So again, an investment activity. Okay. Okay, what about profit on sale of assets? Which is this activity? Any asset. The operating activity is you do it on day-to-day basis. Do you sell your assets on day-to-day basis? Every month, every year? No, right? So it cannot be your operating activities. Operating is what you do on day-to-day basis. Okay, profit on sale of asset means you have, why have you purchased an asset? Now, purchase of asset is what? Which activity? To purchase an asset. Purchase a plant. Purchase means investing because you have purchased the asset for future benefit. Purchase of asset. So whatever things you have done for future benefits are said to be investing activity, and from that you get amount and you get money, that is called investing activities. All that is buying and selling of investment, asset, whatever, which have future benefits. Yeah, investing in anything and whatever you receive. Investing is also a investing activity only, as the word is investing. Now in our example, now can we bifurcate? Can you help me bifurcate this? What is proceeds from equity holders? Which activity is this? Proceed means I have raised money from equity holders. Which activity? Financing is like taking loans, right? It will be a financing activity, taking loans. Okay. Buyback of equity, which activity? Again, finance. The same, you are repaying back. Okay, purchase of PP. What is it? Investing. What you invest. Okay. I'm just changing things. Okay. Purchase of nothing. Then purchase of inventory. Now what is this? Purchase of inventory and sale of inventories. Which activity will be this? Yeah, this will be operating because you purchase and sell inventories every now and then. Okay, you don't purchase assets every now and then. Okay, purchase of inventory and sell of inventory. Okay. Purchase of inventories and selling of inventories. Okay, what about PAT? Now, PAT is the profit. So this profit, ideally it is assumed that you earn from operations only. Okay. PAT is a profit that you earn from operations. So PAT is your operations, cash flow from operations. Okay. What about depreciation? Now see, depreciation is not any activity. It is a part of PAT only. Okay. Remember this. It is not any activity. It is a part of PAT only. That is why it comes under operations. Okay, it is because it is not a cash inflow, not a cash outflow. Okay, it is not an activity where cash has come in or cash has gone out. It is what? It is a part of PAT. Since PAT was reduced by this amount, so you add back. Okay. So what about dividends paid? Which activity? Paid financing. Okay. So what I have done over here, I have just regrouped, everything. So that what happens over here is that I've regrouped over here. Here now what I do is I will find total cash flow from operations. What is my total cash flow from operations? Can I say this? Once from here, I have earned 1040 from operations. No, dividend is only financing. I don't know, finance operating is what every now and then you don't pay dividends every now and then, every month. Cash flow from operations is this. I have invested 5 million in assets, investing activity, and I have taken loan approx this. So, over here I found that the opening was okay. So cash earned for the year. $986. This is the cash that was raised. This is what I've invested, and 10.4 is what I have earned. My cash earned for the year was, can I say A plus B plus C? I will write this A, B, C. Now add all this A plus B plus C. Cash earned for the year, my opening balance. So I will also write my opening balance because since it was my first year, my opening balance was 0. Now what is my closing balance now? My closing balance will be the same, but I will still link it. 5.886 plus this is my closing balance. Now this closing balance I will just make and change over here and reflect over here. Okay. Now you come to know that this cash is earned from where? Where have you got this cash from? Okay. So ideally cash flow from operation should be higher, right? Which should be lower? Which cash item should be lower? So, where should the cash be lower from? Now from financing, it should ideally negative means better that you are repaying all the loans. Should cash flow from investing be positive? Yes. See, ideally, when this number is a big amount, if the cash flow for investing in a big amount, see, first of all, it doesn't say anything about your operations. Am I right? This cash flow for investing, you have invested in somewhere else that is giving you money. It can also sometimes come now, you sell your assets and you earn cash. Good thing now. You sold some assets and you got some cash over here. So good now. Having cash on the book is good. Selling your assets and earning cash is a good sign. Selling your assets and earning cash. Will that be sustainable? All right, it should not. So investing shouldn't be that high. The cash flow shouldn't be. If it's coming from, let's say, interest income and all, then that's then there's a different thing. But if it's coming from selling of the asset, then there's a problem that the company is selling off its asset and earning cash. That is why cash flow statement shows you good picture of what the company is exactly doing comparatively with your P&L, because cash is what is important in the business. This is all paper profits. This can be manipulated. Selling asset is not a good sign. This is all paper profits. So cash flow statement, one of the important statement in finance, which was not taught in our whole career. The excess cash can be distributed as dividends to the shareholders, which the shareholders be happy. Excess cash, you cannot say excess. What do you mean by excess cash? How do you find excess cash? Okay, so this is the cash flow statement and how this is. There are many items over here, but this is the basic how the cash flow statement is made. Okay, you need to know that where is the cash you're earning from, where it is coming from. Okay, this is bifurcation is very important to know that what is the company is earning. See now over here it has said that it had a profit of how much, 1.5 million, but if you see actually it has earned how much, only 1.04 million. You see 5 million cash they have not earned. They've invested in inventories, which is not seen on the P&L statement. Sometimes this becomes so low, this cash becomes so low that the profit is high and the cash is very low. That time you feel that the company is not worth investing. Even if the company is a profit making company, the company is not earning cash flow from operations, there's no point running the company or investing in the company. In startup you don't get cash flows because there's no only cash is not generated. The startup's valuation depends on your product valuation. It is how much your product can do. So at the end it becomes the cash flow only. In normal companies we start with forecasting 2-3 years. In startup we start forecasting after 15 years. That's what the company will do after 15 years or maybe 10 years. Okay. So after 10 years, the company will earn this much of cash, what is its value today? The startup you will not get cash flows, all negative. There's only this is what is positive. Rest all is negative. Okay. Now I would like to ask you one question over here. Okay. This was a question asked to me in an interview. My depreciation was 5 million. Okay, over here. Now what I do is I was checking my accounts again and I found that this was a question asked to be my interview. So this was a question asked to me by many MNCs in an interview. Basic question, since you did this modeling, just asking you one question, that if my depreciation was understated by 10,000, I'm saying depreciation was understated. Understated means what? You know what understated means? Understated means this 5 million, I have said that it was understated by 10,000. Ideally, it should have been 5,10,000, but I understated by 10,000. Now, so if I want to restate, what will be my impact on P&L, balance sheet, and cash flows? What will be impact on P&L? I just want the changes, P&L, my balance sheet, and cash flows. What will be my impact on P&L, balance sheet, and cash flows? Yeah, it means that it should be 510. So if I restate now, if I do this 500, I do 510, then yeah. So what will be my increase in profit or decrease in profit? Will my profit increase or reduce? Okay, Rishabh was saying PAT will reduce by 10K. Okay, fine. PAT reduces by 10. Then cash flow remains same. Okay, what happens on the balance sheet? What happens on the balance sheet? The reserves, right? Okay, other equity. Other equity reduces by 10. Okay, what about fixed assets? Total assets, okay, reduced by 10. Tally? Tally? This is balance sheet, no? So this is the balance sheet. Other equity reduced by 10. Fixed asset reduced by 10. The P&L reduced. So no impact on cash flows, right? No impact on cash flows. Right now? Why no impact on cash flows? Why no impact on cash flows? This is my cash flow statement, right? Okay. See, what is my cash flow from operation is one. I am writing it over here. 1040. Okay. I am going and changing a number from over here. Okay. This 5 million. I'm just adding more 10,000 to it. Okay. So it became 510, right? So as you said, everything reduces. See what happens on my cash flow statement. Should be same now. It changed. It actually increased. Why? Why it increased? Yeah. Guys, why does it increase? Depreciation. Now what depreciation? Why did my cash flow? Dividend paid is also no, dividend paid is not an operating asset. No? Tax. See guys, see why? See my cash flow actually increased. Now why? No, why it increased? And it increased by how much? 3,000. You see? See what is happening over here is, see when I add an expense over here, you know, my profit before tax reduces. What was my profit before? If I give you a situation like this, let us say you were earning 1 lakh profit, okay? You were earning a profit of 1 lakh, okay? You and me both were earning a profit of 1 lakh, okay? How much tax? Let's say we were paying a tax of 30%, both, okay? This is a profit, okay? We were paying a tax of 30%. So can I say we were paying, both were paying 30,000, right? We both were paying 30,000. Now, one of your expense increased. You say some expense, okay? For you, the expense increased. And yeah, profit after tax was how much over here? 70,000. Both had a profit of 70,000. Now, one of your expense increased, but now this expense wasn't your, cash expense. It was a non-cash expense, right? You have also taken, because as per accounting, you can take a non-cash expense. I say that the expense is 10,000. Right? Now here, what will be your profit before tax? Now, if your profit before tax is 90K, what will happen to your tax? Increase or decrease? By how much it decreased? it decreased by 3,000. And how do you calculate it directly? You know, because since your expenses increases by 10,000 and your tax rate was 30%, so your taxes decreased by 3,000 because you save 3,000 on taxes. Because now government says that since you have taken an expense, you don't have to pay tax on the 1 lakh, right? You will pay tax on what? On the 90,000 and not on the 1 lakh. And but this wasn't a cash outflow, right? Did you pay any cash? You don't pay any cash over here, but it helped you reduce your other expense, that is your tax. So increase in one expenses led to reduction in other expense, that is your tax. So depreciation, increase in depreciation saves your taxes, and that tax is on cash flow from operations. Your cash flow from operations actually increases by 3,000. Okay. So that's the impact on the cash flow. So this was the first question asked to me in a quizzle interview. See, if I would have gone wrong on this, to see where would I have been now today. This is what you need to know. And this is, be sure that these are the questions which are asked on the interviews. What happens when your depreciation is overstated or understated? They will give you any amount. Now your responsibility over here is to ask the interviewer the tax rate. What if I say it was 40,000? What if I say it was 40%? Sorry. Now, understated. What if I say the tax rate was 40%? What will be my impact? So it will increase my cash by 4,000. Now here, what will be the impact over here? Or if my tax rate is 40%, my profit will not reduce by 10,000. My profit will only reduce by 6,000. You know why? Profit will only reduce by 6,000. Why? Because 4,000 you saved on taxes. So 4,000 was reduced. Other expenses, one of the expense reduced. The tax reduced. One expense increase, other reduced. So you actually did a tax saving. So the profit only reduces by 6,000. So your other equity will also reduce by 6,000. The asset reduces by 10. But then your cash, is it telling now? Not telling, right? 10 and 6. So what you do? Your cash increases by 4,000. This is how the balance sheet tallies. The change of 6 and here the change of 6. Okay, what if I say that it was overstated now? Now I say that my cash was, my depreciation was overstated by 10,000. Now I have to reduce my depreciation. Profit will increase by how much? Profit will increase by how much? If the tax rate is 30%, obviously it will raise by, profit will not increase by 1,000. And it will not increase by 10,000, it will increase by 7,000 because now you will pay additional 3,000 of taxes. Am I right? What happened to the cash now? What happened to the cash? Cash will increase. Here what will happen? The profit increases by 7,000, right? It increases by 7,000. This, what happened to the fixed asset? Fixed asset increase or decrease? Fixed asset will increase by 10,000. Now how will you do the gap? What will be the gap? This, your cash will reduce by 3,000. See, now these are the questions which are asked after doing modeling. See, modeling is not, just making a model and showing that I know modeling. Many of the classes teach you this way only. You know modeling, but after modeling, when they ask you this type of question, and if you are not capable of answering it, then modeling is of no use. They show that you have copy pasted the model. Anyone, modeling is not a not rocket science. Financing thing is important over here. Binal, profit increased by 7,000 because no, now you will pay a higher tax now. Your expenses reduced by 10,000, so profit should increase by 10,000. But when you earn an additional 10,000 of profit, how much additional tax will you pay? So ideally, how much you earn? If I say your salary increased by 10,000 and now you have to pay 3,000 tax on it. So ideally, how much your salary increased? No, when you say your salary increased by 10,000, you have to pay 30% tax on it. Your salary didn't increase by 10,000, it increased only by 7,000. Yeah. Right after this, there's a question asked. And if I ask you that I had a fixed asset of 10, okay. I sold this asset for a 2,000 loss. 10,000, okay. The figure is 10,000. I'm saying that I sold this asset for a 2,000 loss. What will be my impact on balance sheet? Now, don't take the tax impact. Just tell me what will be the impact on balance sheet. Don't take the tax impact over here. Just tell me what will be the impact on balance sheet. Where the tax is 0. I sold a asset for this asset 10,000 for a 2,000 loss. An asset for a 2,000 loss. What will be? Cash will increase by 8K, okay. And the cash increase by 8K. 2,000 should be shown in P&L. Okay, the P&L, so it will be shown in other equity, right? And what happened now? Now, I'm not telling. What will be this fixed asset? Fixed asset will become what? It will be reduced by 10, right? So it will be 0. So my balance sheet is not telling. There's 8,000, there's 2,000. Why? Yeah, CFO, the cash increase. How will CFO increase? It will be CFI, na investing activity. Sold your asset. Why is not telling, guys? Any answer why it is not telling? Pinan, Prashant, Manish, Swati. The 8 minus 2, yeah, that. But minus 10K becomes 0 now over here. How can I write minus 10K over here? It is not tallying, no? Can you write minus 10K over here? You cannot write minus 10K on the balance sheet. It is not telling na, the balance you price you answer, this you answer. So your other equity reduced by 2000 and your cash is increased by 8000. So what it should tell you na, balance sheet. Asset side it is 8000 and the liability side it is 2000. Why it is not telling? You see why CFO? What is loss? Why loss should be added to CFO? No depreciation and all. Oh yeah. What can you do with depreciation? Give me an amount. Anyone? Yes, CFI. Asset will be reduced by 10K. Yeah, so I reduced, na? It became 0, right? It was 10,000 before I reduced. It became 10K. It became 0. Now what? Okay, see now here. Why 10K minus from cash flow? Why? Why minus from cash flow? You know, guys, here you guys, how you got this 0.3? Okay, guys, see now here what I asked you now. Penal was close to answering. See, Penal, even after answering the right question, you had gone wrong because answering it right, you didn't get it why you were right. Because see, when I ask you the question at first that I had a fixed asset of 10,000, you know, on a balance sheet, if this is my asset, this is my liabilities, and these are my assets. Okay, in my assets and liabilities, how can my balance sheet be like this? First up, can I say if I have fixed assets of 10,000, I will also have an equity of 10,000? Can this happen that there is only balance sheet, only asset of 10,000 on the balance sheet? You were right, you answered it right, but you know, the interviewers try to ask you, try to say that you are wrong. You have to prove that why you are right. The conceptual thing. You were right that 10,000 minus 10,000, but they say that how will you write minus 10,000 on the balance sheet? So ideally, this was the answer that if asset was 10,000, so obviously your equity would also be 10,000. Before that, apart from how can we only asset be 10,000? Cannot be 10,000. So when you sell this asset, you sold it for 2,000 loss. So obviously you suffer a 2,000 loss over here, and 8,000 was the cash that you earned from selling the asset. Now here your balance sheet tallies. You have 8,000 and the cash over here is 8,000. This is how the see, even after giving the right answer, interviewers try to say that you are wrong, and you are in that position that you cannot even explain in why you were right because you're already scared. See, this is the problem when you go for interviews. If you go for high level interviews, even if you get a chance for cracking, getting into interviews and you bluff on all this, then you are gone. And these are all basic stuff. Forget about modeling over here. That is, that they need to know that you know modeling. That is mandatory. But now after modeling, what? These are also things that are important. Basic concepts of accounting. And this is not what we have learned now. This is you have learned from 12, 11 to FTY. This is accounts, your accounts. And if you say that you know modeling, then you should also know all this kind of things, that what changes happens. Okay. They're all interview questions. Okay. Basic interview questions which are asked in usually MNC interviews. When you go for MNC interviews, let's say JP Morgan, Morgan Stanley, Barclays, all those companies, Franklin Templeton, Credit Suisse, all these companies do ask you this type of question. Let's say Crisil, Acuity. You know, I have got this question from at least 5 MNCs, and I gave interviews. 5 MNCs asked me the same question somewhere in the interview round. Crisil to asked me on the first question was this only. Tell me what's the depreciation rate. And since I had given 4 interviews before, I knew what was the answer. Okay, when you give the answers confidently, they don't grind you on your done weaker subjects. Then the interview starts like this. Okay, tell me about yourself. What have you done? What models have you done? You have to make them sure that you know every bit of it. Just don't say I've made a model. Okay, this is my model. Hundreds of thousands of candidates who make models. You are not exceptional. Okay, you got it? So these are all interview questions which are asked. Now what I will suggest is I will just, now this was the last homework. I will just add it over here. Today is what? 13th October. 13th November, sorry. Today is 13th November. What I will say is rather, this was just one part which was added. Now in this depreciation, okay, in this purchase of PP, you have to just add a depreciation of 10%. No, I will just, okay, I will give useful life. Okay, useful life is let's say 20 years. Okay, useful life in years. See what happens to your balance sheet. Okay, this was the balance sheet already done, and you have to make one more schedules and find that what will be your this see one the whole class we have just spent on depreciation. The reason because this was the important topic. Once you know this, once you make this model, now here 80% of the modeling is done. 80% of the modeling is done if you know all these things. Now just remaining is your valuation and your FCFF. The next class we will do okay, working capital is remaining, but after that we will do FCFF. That's it. Only one part is remaining after this. In 3 days, 3 sessions, basic modeling is done. The next 3 days we will just learn about more concept about modeling. That's it. Okay. If I give you debt, can you find? If I say that the company has taken a debt, okay, let's do it. See whether you can do it. Don't take interest as of now. Interest is 0. This fixed asset schedule, this one. This one we have to create. PP schedule. For 1 year only you have to create. Okay. Unit not visible, business visible. Okay, now don't do that. Okay, that will do tomorrow because of the interest also which will come. So there was one homework. This useful life. This was the additional of the homework that is done today. Okay. Useful life in years is 20 years. Now you can find what is the depreciation now. The useful life is 20 years. What is the depreciation? Depreciation will be 5%. Okay, 1 divided by 20. Not 20%, it will be 5%. Here I have done it. Take a reference of this file. Okay. The useful life is to be written in red, and then this will come by 1 divided by this amount. Okay. Try doing it, see what happens, the changes, and make sure that you have to do some changes also over here. Now from over here, the balance sheet, your purchase of inventory, sorry, purchase of asset will change. Try and now make this schedules again and take a new, or already you have created the schedule, right? Already you have created this balance sheet. You have this file. sorry, cash flows. Now just rearrange the cash flows. Okay, in this way, what I have done over here. Fine, and then send to Soumitra. So now we have now. So since the lectures are happening after long time, sometime it is taking a week's time. So what is suggested is that there are many people in the class, and some of them are really interested, some of them are not. They just come and spam. This is what we have known from last few sessions, that people over there are many people over here, but since you have paid only minimum amount, people over here are just spamming, just messaging, and no, I don't understand this, I don't understand that, I have not, and just wasting time of others who are actually interested. So the one who are submitting the answers are only allowed in the next class. Others are not allowed, because and you have the video recordings with you. Don't say that I was absent, I was not there in the last class. Recordings are available with you. You can go and see the recording. But the one who sent files to Soumitra are only allowed in the class. So we have decided we will make a list of students who are interested, because what happens when you go to intensive, when we give certificates, at that time recruiters call us, and if you don't know anything, it's the same on us. So the one who are interested, one who does homework, only those will be allowed from next class. So make sure you do. The one who have not done the last class also, try to make it. See, it is doing wrong is no harm, but knowing nothing is a harm. I'm not saying that you should be right. And the one who are seriously interested, see, we are not charging you any money, any hard money. If you go out, financial modeling is around 40-50,000 rupees course, only financial modeling. So we are only doing it for the one who are interested, who are actually interested in making career. Even I am spending my time. I am an analyst. I am not someone who has free time. We are doing it at a low cost. So those who are interested, only for those people who are actually interested. You submit the homework to Soumitra. Submit the Excel file to Soumitra, then we'll make a list, and only those people will be allowed from next class. Others, I'm not interested to teach them. The one who have done, I can take the 100 doubts, but not one who doesn't do anything and just come and ask that I don't understand this, I don't understand that. So the next so lectures usually happen, in a week's time. So there's a lot of time for you to go through the lecture, go to the class. So usually we know it was on Saturday's batch, so might be it will happen on Saturday only, or might someday in the week. Soumitra will tell you. If it's in the week, it will happen 7 to 9. If it's on weekend, it will be like 3 to 5 or maybe 11 to 1, something like that. Yeah, Nishi.
Please correct me where I'm wrong. Like you have said the example, if we have loss in selling our asset, we will show loss from selling asset in PL account.
Right.
And CFO, since our PAT is reduced by 2,000, and this is not a cash flow, we will add back this cash flow to CFO.
So why would you add back the cash flow to CFO?
Because since
we can add back. It is also operating.
But our PAT is reduced by loss, so
right.
don't we add to CFO?
You add back to CFO, but you again subtract it from CFI, no?
Okay.
Because it was a loss, no? It was a loss, right? See, you lose, no? You lost 2,000, right?
Okay, but we will add to CFO, na?
Yeah, we'll add
that
to
is
CFO. Yeah, we'll add to CFO and subtract it from. That will come later on, right? But your cash doesn't change. Your cash is 8,000 only. The cash will not reduce again. You add to CFO and subtract by. This is just a representing. How you represent it.
Okay, fine.
Okay.
Okay.
Okay, guys. See you next week. See you next week. Have a nice week ahead. Do your homework, Sana. What happens that the ones who are interested, we can interact more on practical topics as well. Here, I just to do doubts. I am just having the time is wasting on solving others' doubts. Those who are not interested. Rather, I will solve the doubts who are actually interested. I'm sharing this file in the group as well now. So now it will take some minute to send back to you. So I'm sending it now. Those who are online, you can just download from here only. So video will take time, or rather, then I'm sending in the chat box. You can download it. 1 minute. Yeah, sure.